and welcome. You're watching Your Trade. I'm Kavita Thapliyal. With me is Mansi Dave. And today, after a very positive start, we saw the market slipping into the red. Investors really got cautious about the global uncertainty and also about the GST Council meeting later this week. We definitely, Mansi, shut the shop at around 24,570 levels. And we've seen upsurge. The day high was almost on 25,765 levels. But beyond that, we've seen the market racing down.
Absolutely. It was a good start, Kavita. But then, yes, volatility was anticipated as weekly NSE expiry change did kick in. And we also did tell you that this is the first time, as per the norms, that the F&O contract expiry happens on a Tuesday. And so the volatility was anticipated. And that's what happened. We started quite well. 24,750 was the level also, which we did see. But then while we were closing, it was 24,600 and even lower, 24,579 to be precise. Talking about the larger players, yes, the benchmarks Nifty, Bank Nifty, sensex did tank down during the session. The broader markets also were mirroring the benchmarks, and it was a very good start for the mid cap. But while we were closing, mid cap and small cap also did see signs of absolute volatility. FMCG emerged as a top gainer, and realty, metal, oil and gas did lend the support. But on the flip side, there were a few other sectors which were doing negative rounds, in which the pharma space as well as the banks and financials were added up. Talking about the contributors in the market, yes, it was the big boy Reliance which was trying to help the market during the session. We also had positive brokerage reports, NTPC, HUL, Power Grid and Tata Consumer, a few which were the larger contributors, and the laggards were ICICI Bank, M&M, Kotak Bank, Bharti Airtel, L&T. So clearly a contradictory picture, Kavita, which the first half did see all positives and the second half was negative.
Absolutely. But then what's in store for our viewers? Let's have an expert also join in. Ajit Mishra, SVP Research Religare Broking, is with us. Ajit, hi, afternoon and welcome to the show. All right, so after today's trade and today's day, what's the market for the entire week looking according to you from your lens, and also what specific sectors? You can also begin by highlighting the Bank Nifty, which has been in tremendous pressure. And we closed around 53,660 levels, again in an oversold category.
Yeah, good afternoon, Kavita. Good afternoon, Mansi. So, yes, it was kind of a roller coaster ride for the markets because, the first half, it was positive. We were continuing with the last trading sessions bias. We've tested the 20 EMA mark around 24,720 area, but we couldn't sustain. Today, the major concern was the shifting of the expiry, that the second half completely changed the tone. Banking, yeah, as you rightly mentioned, Kavita, that that's the major concern basically. Means we are already at 200 days of exponential moving average. That is a long-term trend, which shows the long-term trend for any underlying. And we are already at that level for the banking index. So 53,600 is the zone basically where in the last three trading session, banking index is trying to defend. Today also we have tested that mark, but eventually we managed to end marginally above the same. So going ahead, we feel that indications are mixed when it comes to the sectoral move. Means at one end, the consumer facing, be it auto, FMCG, consumer durables, some of the metal names, and then we have themes also which are unfolding with every passing day. A day before we were seeing that paper stocks, today it was sugar, PSU names. So sectorally, you will continue to find buying opportunity across the board. But at the same time, when it comes to the index, I feel this lackluster move might continue until we see some decisiveness in the banking index. Means in case to hold this 53,600 level, then probably we might see a next leg of the down move, which could help the index to retest the previous swing lows around 24,350 in the Nifty, or maybe lower the long-term moving average around 24,250.
That's right, and I completely agree to that. We have sectors and themes playing even in the volatile market, even when the indices are quite volatile. But then, Ajit, what will be your trading ideas? Because like you rightly pointed out, sector-specific moves were many in the market, and so we also had a lot of stocks which were playing a positive during the session.
Certainly, and that's the reason why we are also recommending to our clients to not to give much weightage to what we are seeing in the index, especially in the current market scenario, and focus more on the themes. So, basis that, the FMCG pack definitely looks upbeat to us. Means we were seeing very tight range consolidation, and post earning we were seeing that some of these stocks that already started performing, and now we are seeing catch up move in the others also. So first stock from the list, that is Tata Consumers. The stock has formed a very strong base after the marginal profit taking around the short-term averages, and now it looks set for a recovery towards 1170 area. So with stop at 1075, one can accumulate Tata Consumers at current levels. Then from the metal space, Hindalco is where we are seeing outperformance. Uh, Post this marginal range consolidation around the recent highs, the stock is set for the next leg of the up move, and 760 is what we are eyeing in the near future. So with stop at 700, one can accumulate Hindalco also at the current levels.
All right, so a buy call in Tata Consumer, target is 1170, and a buy call in Hindalco, again, the target is 760. Thank you so much, Ajit, for being on the show today. But then let's get connected with Srishti, who's there with everything happening on the technical charts. So, Srishti, do you have any breakout counters for the day?
Well, yes, even in the this sort of a market, we have got two breakout stocks to highlight for our viewers. And firstly, let's put the spotlight on Nalco, because the metal pack was shining bright, and specifically on Nalco, what do we spot is the retest of its 200 levels, because of late we can see that Nalco has been trying to surpass this particular level, but wasn't that successful. But in today's trading session, it was almost a 4% jump coming in on Nalco. The stock is now seen to be trading above its all key moving averages. And in the month of July as well, we have seen such levels coming in. The stock was down and then seen a consolidation, but once again seen to be resuming its journey upwards. So that's the first stock we wish to highlight on the breakout side. The other stock is from the consumption basket, and that is Nestle India, because of late a lot of these staple companies are showing good moves. But specifically on Nestle, what do we get to see is that yes, the stock has come off its highest level, and even a while back, a couple of months back, it was under pressure. But of late, the stock is seen to be recovering. It was the second straight day of gains. The stock is now seen to be trading above its all key moving averages, and hence the breakout. So these are the two counters for today. Back to you.
Absolutely. Even in volatile markets, we have managed to get you some breakout stocks. Thanks for that, Shrishti. Moving ahead, and let's give you some word from the wise. Vikas Khemani, founder Carnelian Asset Management, shares a list of sectors that he likes. He is overweight on manufacturing, pharma, banking and IT. He also believes that the tech sector will see single-digit or early teens returns. Let's listen in.
No, I think of course financials would can lead that, and other sectors as well can. I mean, like all along, people have been negative on IT. IT, I think, can kind of do well from here. Manufacturing space, in pharma and all in my opinion, can continue to do well. We've been kind of fairly large overweight position in that, and within banking also, again, people think that last banking, according to me, can continue to do well, and we are reasonably overweight there as well. So I think you don't need a new sector leader to lead the market. So in large cap IT, you cannot expect significant returns. I mean, probably single digit or maybe early teens kind of returns you can expect on a sustainable basis. According to me, that's what potential is there. But within IT also, there are many companies, especially in our opinion, we maintain that for a very long time, that mid and small cap IT will do well because A, of their base effect, plus secondly, their ability to be agile and be far more adaptive is far better. And hence, there are companies and also new segments are emerging, whether it is SaaS-oriented companies or product-oriented companies, where the non-linearity of the profitability kicks in. And and ER&D space is there, which is also fast growing. So you got to look at pockets which are fast growing.
All right, moving on, BSE could see some pain in terms of market share loss and EPS hit as weekly expiry changes come into effect from today. Rabinder, our colleague, has joined us with all those explanations. Rabinder?
Well, yes, BSE can be in focus in today's trading session, where NSE has shifted its weekly expiry to Tuesday, which is starting from today. And while BSE contracts will now expire on Thursday, and according to Goldman Sachs, the shift could cost BSE around 3% market shares and a trigger to 2% EPS decline in FY26. But why it is negative for BSE and why NSE has an edge? The NSE traders gain an extra window Friday, Monday, and Tuesday to adjust or hedge position, and this theta play advantage provides more room for strategic moves ahead of expiry. And this is as per Kotak Securities. But why it is negative for BSE? Because with only 2 sessions, Wednesday and Thursday before expiry, BSE faces a trigger trading window that may deter participation, and analysts expect 10 to 15% of volume erosions, and translating into a 5 to 10% earnings hit. And what BSE is doing currently now is to stunt liquidity. BSE is ramping up their infrastructure, adding co-location racks and bringing into more brokers and FPI. But not only BSE, in the past few months or weeks, we have seen a sharp fall in the capital market space. Then and the key trigger for all this is trigger FNO regulations, SEBI's push for long-term derivatives, and higher cash market volumes, and drop in retail participation post the Jane Street incident. And lastly, if we talk about stock tracker of BSE, then BSE stock is down 28% from their 52-week high, and down 19% in last 3 months. So overall, it is a negative for BSE.
Absolutely. Thanks for all of those updates, Ravinder. Moving ahead, another sector which was positive in trade during the session was the sugar sector, which was quite sweet. The sugar stocks were in focus on the back of government's notification over ethanol production. Let's go across to Ashesha to know more details on the space. Ashesha, over to you.
Well, yes, the entire sugar sector is in focus on the back of several news pieces that have come. Now, remember, government has removed all kind of restrictions on the usage of sugarcane syrup, juice, and B-heavy and C-heavy molasses that was used for production of ethanol. So, remember, last year, government had imposed restrictions to ensure availability of sugar in the domestic market. But now, all of these restrictions have been removed, and this is a now positive news flow for the entire sugar industry. Remember, for ethanol, the year begins on the 1st of November, and this notification will be applicable for the next ethanol year, which will begin on the 1st of November. So for now, all restrictions have been removed, and this will be a positive. Now, what led to this? One, of course, is a higher than above normal monsoon, and that is expected to aid sugar production next year. ISMA estimates suggest that this year sugar production stood at about 295 million tons, and that is expected to rise by about 18% next year to come in at 349 million tons. So on account of surge in sugar production that is expected to happen next year, government has preemptively taken this measure, and they've decided to remove all kind of restrictions on usage of sugarcane syrup, sugarcane any kind of juice, and B-heavy and C-heavy molasses that is used for the production of ethanol. So yes, positive news flow that has come in.
And we also caught up with Sri Renuka Sugars and Balrampur Chini and got their views on the same, isn't it?
As of last year also, there was actually no particular restriction on diversion of juice for making ethanol. But yes, definitely a welcome, clarification and ambiguity. But the main topic for us still remains, and I believe all sugar, I speak for all the sugar industry when I say this, but ethanol pricing is actually the point which is much more important and which needs to be declared sooner rather than later. So I think the inventory levels are pretty conservative. I think the government number is 5.5. I think that's under control. But now that there will be a bumper crop expected next year, we'll have to see how the diversion actually plays out. That will depend on definitely the ethanol pricing and sugar production. It seems, at least from Maharashtra and Karnataka,
they are now announcing it well in time that there will be no restrictions. So this actually reflects the confidence in the government, and hopefully it's going to be good for the sugar sector in the sense that the government might actually end up diverting more sugar towards ethanol, because sugar has got the right ecosystem in place. So sugar sector, I think it's good times for the sugar sector, hopefully. And if we go by what ISMA says, then the production is going to rebound big time, which is a fact. In fact, I was talking to our cane guys in Karnataka and Maharashtra, where our mills are. They also feel that anywhere between 15 to 18% increase compared to last year would be in the cane availability. That all goes well.
So that were the managements of sugar companies on the upsurge and the latest new scenarios on sugar sector. But just like the sugar sector, the auto sector is also ranging quite positive in trades these days. And when we talk about auto, can't forget the auto ancillary. And auto ancillary in particular, the tire stocks were buzzing during the trading session. And all the auto majors reported better than expected sales in the month gone by, and on the back of it, an eventual impact was seen in the tire stocks as well. So, what were the major reasons and rationale behind the upsurge in the tire space? Our colleague Kanishka is again joining with us for the details of the same. Kanishka.
Well, tire stocks are on fire in today's trading session. Well, let's take a look at 6 key reasons why they are trading in fast lane. First up, August auto sales have come in better than expected, and that's the reason why these stocks are in focus. Data from the rubber board suggests that Seat, Apollo Tyres and JK Tyre, their sales rose up to 4% year on year in the month gone by. Meanwhile, MRF saw a 2% uptick, whereas Balkrishna Industries, they saw a 1% uptick, and that's the reason why these stocks are in focus. Second reason, of course, that raw material prices are stable, with natural rubber price that is also seeing a downward trend, and that's the reason. The third one, of course, is that there is a festive push also, due to which replacement demand that is expected to pick up. Other than that, export demand could also see a revival once tariff clarity emerges in terms of US tariffs that have been imposed in India. On the corporate side, Seat has completed a key global acquisition on the OHT segment. And that's the reason why Seat is rallying in trade today. And lastly, we're also seeing some DIY buying in some counters, and hence all of these tire stocks are in the fast lane today.
Fast lane for tire stocks. Thanks for that update, Kanishka. Moving ahead, Reliance did jump in trade on the back of bullish note from Morgan Stanley. The brokerage firm has maintained its stance and has hiked its targets. What makes the brokerage bullish on big boy Reliance? Shrishti is here with the details. Shrishti.
Well, yes, that's a positive note coming in on big boy Reliance, where Morgan Stanley has actually gone ahead and raised the target price on Reliance Industries from 1,602 rupees earlier to 1,701 rupees now, while maintaining their overweight stance. What Morgan Stanley is highlighting is that Reliance Industries will actually be the largest beneficiary of China's anti-involution policies, which are focusing across its energy as well as solar supply chains. Now, China's anti-involution marks the bottom of the petrochemical cycle, while it efforts to tackle the overcapacity in the solar industry while aiding the price for Reliance solar supply chain as well. Now, along with that, the company's self-anti-involution in customer retail and telecom, that is also seen to be bearing fruit, and specifically with respect to their telecom arm, wherein in the latest we have seen Jio really taking off almost 190 million low ARPU subscriber off its networks, and is recently also tinkered with its offering to help better monetization. And keeping in view all of these policies and action that Reliance Industries is undertaking, they overall see involution adds to $20 billion in NAV and 17% to FY28 EPS as well. So that's the things and factors at play for Reliance Industries is what Morgan Stanley is highlighting at this point in time.
Right, so on the radar, Reliance Industries on the back of a positive brokerage report. Moving ahead, let's now take a look at what were the news flows doing rounds on the exchanges. Rabinder is here with all the stocks and news. Rabinder?
Well, as Bharat Electronic is in focus, where company has announced that the company has received order of rupees 644 crore since the last disclosure made on 30 July 2025. Apart from this, Fortis Healthcare is also in the focus, where company's wholly owned subsidiary International Hospital Limited has entered into a 15 years lease agreement with RR Life Science Limited for approximately 200-bed fully operational multi-specialty hospital in Greater Noida. Apart from this, RateGain Travel Technologies is also in the focus, where RateGain It can introduce hospitality industry first MCP integration for booking engine usable with Cloud and other AI assistant. Canfin Home is also in the focus, where board is scheduled to be held on 3rd September 2025 to consider fundraise up to rupees 10,000 crore. Apart from this, Tridents were also in the focus, where a board has approved the investment in the equity shares of Trident Global Corporation Limited, which is a public limited company of up to rupees 250 crore. And lastly, Max Healthcare is also in the focus, where Kotak Security has come out with a note and they have maintained the reduced rating, and they have cut target price rupees 1125 as compared to earlier target price rupees 1140. So back of this, Max Healthcare is also in the focus.
Ravinder, thanks for all of those stocks and news. But then there are a lot of cues, triggers and events you need to watch out for. Snehi is here with all the economic indicative action we need to keep an eye on for tomorrow. Snehi, over to you.
Well, yes, lots of cues to watch out for, and the biggest trigger for the Indian market is going to be the two-day GST meeting that's going to commence. Lots of sectors like auto, consumption, insurance could be in focus, so watch out for that very closely. Other than that, globally from the US, you have the Fed that will be releasing its beige book, and you also have the jobs openings data coming out of the US. From Eurozone, you have their PPI and services PMI numbers coming out, and similar for China, the services PMI data will be out as well. In terms of corporate action and board meetings back home, IIFL Finance will be in focus. The board is going to be meeting to mull fundraising. Maruti Suzuki will be launching its new SUV as well, so watch out for that. Concord Biotech Prestige Estates will be trading ex-dividend, and it's going to be the last day to buy the shares of Finolex Cables, Gujarat Gas, GIC-RE, Kalyan Jewellers, Metro Brands, New India Assurance, NTPC, Oil India, ONGC, and a whole host of other stocks. It will be the last day to buy the shares of these stocks if you do wish to be eligible for their dividend record date. In terms of AGMs, watch out for Mass Financial, JBM Auto, Delivery and JK Tyre. And lastly, in terms of other events, some important commentary is what we're expecting to see from some central bank leaders. ECB President Christine Lagarde is set to speak at an event, and so is BOE rate setter Catherine Mann. So watch out for commentaries coming in from both of them. But well, yes, keep a close eye for all of these cues.
Absolutely, Snehi. Thanks for all of those cues. And now let's talk about investment. The beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investment as well. To encourage this habit, SBI Mutual Fund in collaboration with Times Network is launching a nationwide investor awareness initiative. Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. On that note, it's a wrap on this session of Your Trades. I take your leave, but there's a lot lined up on ET Now. You stay tuned with us.